I'm obviously Michael. I do the accounts for Cure Care, and I have done now for close on 3.5 years, I think it is. So nearly not long after the company started. I am a self-employed subcontractor to the company, so I do other things as well. But basically, I have been doing bookkeeping and accounts for 6-7 years maybe. And I started off in a hospitality background, so I've got sort of a good sort of scope across different industries. But my biggest task, apart from current care, which is a big task, is looking after self-employed workers basically, and doing their accounts and doing their books and tax returns.
Marvellous. So, in a nutshell, you couldn't be better placed to tell us all about how to nail your tax return.
Well, hopefully, yeah. Hopefully, I'd say that that is the idea. Yeah.
Marvellous. Marvellous. Okay, superb. That's really helpful. So, Mike, if I can hand the floor over to you to, and can see you've got this fabulous presentation already in place. But perhaps if I can start by maybe pitching a question to you that you can then answer for everyone. You could start by maybe just telling us what is a tax return and why we need to complete one.
Okay, so the first thing is, sadly, everybody has to pay tax on their earnings. So whether you're employed or self-employed, everybody unfortunately has to pay tax. It's one of the definitives in life that is the case. When you're employed, you obviously have the tax deducted from your pay. So that's on your pay slip. That gets deducted at source. So when you see your pay, you don't have any tax to come off. When you're self-employed, however, there's no way that you can deduct that at source because you carry out your work over the whole year. So when you're self-employed, the tax return is a way for Her Majesty's Revenue and Customs, HMRC, to work out how much tax you need to pay. As a sole trader, which is very much what I think most people will be, you and your business is you. So you are your business and your business is you. You are an individual entity. It's slightly different if you're a limited company or a partnership, but in those cases, you wouldn't be filling out a self-assessment return. You'd have to get accounts audited. So I'm making an assumption that everybody is a sole trader, which means basically they are employed to deliver care or to carry out the work themselves. So basically, yeah, a tax return is a way that the government, the HMRC, can determine how much tax you need to pay. Obviously, if you don't earn enough, then tax isn't necessarily liable, but that just depends. You're not liable for tax. That just depends, obviously, on how much you actually earn, though. So it is one of those things that needs to be completed. They're only completed, luckily, once a year. Definitely, that's a thankful thing. So yeah, that's basically what a tax return is.
Fabulous. Yeah, that's really helpful. And I know with just the word tax can sometimes raise people's anxiety levels. Would you say that a tax return is something to be scared of?
Definitely not. People are definitely very scared of tax returns, but that's because I think there's so much stigma and so many. I think there's so much said about tax, and plus the fact people don't like to pay tax, quite simply. And there's a lot of talk about penalties for not submitting tax returns or penalties for completing a tax return wrong. But it is actually a very straightforward process. And I would adopt the mantle with it that your preparation of it is key. So get your figures together and don't go straight online and try and put the information in. Work out what it is what your figures are. And also that can help your business. So I think it's quite important just to keep a handle on it, but just don't be scared. It's just the figures of what you've actually done in business in the year that the tax return's for.
Yeah, sure. I mean, that's music to my ears. The words like straightforward are always going to score lots of points. And when it comes to actually doing a tax return, is this something that should be just only for accountants, or is it something that you can just do yourself?
Well, you can definitely do it yourself. There are a number of different ways of completing a tax return, and I'm going to give some broad costs of how much it costs generally for if you get other people to do the tax return for you, your self-assessment return. The first option is to instruct an accountant. Now, the costs do vary, and it will vary very much on how many transactions you've got, how much business you've got. But generally, the cost will be around the £200 to £300 mark. Probably, if it's any different, it'll be going up from that. So 200 is probably about the minimum for an accountant, and that is an accountant to do it. You can instruct a bookkeeper like myself. Generally, bookkeepers will charge around £100 to £200. You can also, there are online providers who do it. And again, the price on those varies anything from £100 to £300-400. You've then got somebody, as I say, myself. I can also do tax returns outside take my Cure and Care hat off. I can do that. And I do charge just a special rate for anybody who is through Cure and Care of £85. But you can definitely complete it yourself. It's whether you want to do it. There's quite a lot of my customers that will say to me, I would do it myself, but to be honest, quite often they say I really can't be bothered. But I think that comes down to how scared they are. The important thing is, though, if you can get that information together yourself and you do want somebody else to do it, getting that information together can reduce the cost slightly. But yeah, definitely you can do it yourself as long as you've got a handle on your figures. There's no problem to doing it yourself.
Yeah, that's really good to know. And that word that you just mentioned there, figures. What figures do you need?
Okay. So the first thing is the difference between sales or revenue and profit. You pay your tax based on the profit of your business. Now, sales and revenue are the amount of money you receive from the work that you do before your costs are taken off. So that is the amount of money that you charge for your services. Profit is the money that is left over after you have deducted your costs from the sales figure. So all the costs that are incurred in carrying out your business, they are deducted from the revenue figure, from the sales figure, to give you your profit, which is what you're taxed on. Now, you have to submit your tax return online. The reason you have to at the moment, you can do it in paper, but we have actually passed the deadline for submitting it on a paper form. So you do now have to do it online. So really, it's a case of just getting those figures together and inputting them into the system. It does ask you whether you want to go in a detailed format or in an annual format. And I'll come to it a bit later on, but the annual figures are probably the best way to go. You don't need to put them into detail. The government don't necessarily need them in detail. So you can calculate your total sales and your total costs for the year. And obviously then you can work out what your profit is. But I keep saying this, and I will keep saying this, prepare your figures before you submit, before you try and put them online. That is really important.
Yeah, absolutely. No, that makes sense. We've got some questions coming in. Really great questions. Thank you so much, everyone. I don't know if you want to pause to answer them, or if what we're going to talk about that's coming up is actually going to answer some of these questions. Completely up to you in terms of.
I'm just having a quick look at a couple of those that are coming in. There's quite a few of these that we're going to cover a bit later on. So opening an account with HMRC, I'll come on to that in due course. I see there's a couple of questions on that. There's a question there that if I start work this month, have not secured any job. No, you don't. You only need to submit a return if you carry out work. However, if you have registered with HMRC as self-employed and they have sent you a notice that you need to complete a self-assessment return and you still have done no work, then you will have to either complete a self-assessment return, or you can deregister as self-employed and then re-register. But my suggestion would be probably do what I call a zero return. Now, there's, again, on the dates, I was coming on to the dates now, but I see there's another question on this. I'll just tell you where the tax return dates fall, so that, again, this is a question I get asked quite a lot, is I worked at such and such, should I have to complete a tax return? So the tax return that we're talking about now is to be submitted by the end of January this year. So 31st of January. Now, that is for the year from the 6th of April 2021 to the 5th of April 2022. So only figures between those two dates should be included. Now, not that I want, not that I'm doing this for huge audience sake, but if you've only started work in December or now, I would still listen to certainly the next part of this, because the way you keep your figures is quite important. And if you can keep them right from the word go, it would really help you. So the next bit might actually be quite beneficial. So if you have started after April 2022, you don't have to fill in complete a tax return until 31st of January 2024. So it's always the January following the year end, and the year always ends on the 5th of April each year. So I hope that answers a few of the questions. I'll just see if there's any more.
Yeah, Susan's asked a really good question saying, I'm scared about missing income. And I think that's quite a common one when people are tossing up their numbers. They're worried about if something gets missed, what are the implications?
Well, you basically, when you submit your tax return, you are telling the government that you accept responsibility for the figures that you have put in. So there are penalties if you get your tax return wrong. It's also, though, reasonable. So you've got to, as long as you have tried to put got all of your figures in and tried to get all of your figures in, I'm not going to say to you that you will never get a slap on the wrist for it, but as long as you do your utmost to make sure those figures are absolutely correct, then usually that will suffice. However, the cautionary note here is the answer is get your figures as accurate as you can. You've got to bear in mind that if you're doing work with QMK, we can supply you with copy invoices and things like that. So we can provide you with the documentation so that you can record your sales and income for the year. If you're doing work with other people, and I'm talking self-employed work, that obviously depends. That will depend on who it is you're doing the work for. But the answer is get it as accurate as you possibly can, because you are accepting responsibility for those figures. So if they do investigate you and they find it's wrong, you have to be able to explain that.
Yeah, of course. No, that makes sense. Okay, lovely. There's actually lots of questions that are actually very much along the lines of what I was about to ask you, and that is, how do you go about calculating your costs?
Okay, so the costs. There are quite a number of costs you can claim, and a lot of these that aren't known about. And there was one question I was asked the other day, which was about the QMK fee. Is the QMK fee classed as a cost? Yes, it is. So that's the first cost that you can put in there. One note I'm going to make before I go on about costs is VAT. I'm pretty certain that most people will be not registered for VAT. So therefore, any costs that they incur that they've got VAT on, you take the higher figure, including the VAT. So don't worry about VAT at all. You just take the total cost of the invoice or of the receipt if you're not VAT registered. If you are VAT registered, it's slightly different. And if anybody's got any questions on that, they can ask away, and we'll do our best to answer those. But in terms of the actual VAT, you make sure you cover your cost. The cost you put in includes the VAT if you're not VAT registered. So as I say, the first cost is the QMK fee. But then there's other costs that you can claim. So you can claim for office and stationery, you can claim for clothing, financial costs such as bank charges that are linked to your business, and also the cost if you get somebody to produce your self-assessment or to do your tax return for you. They're a cost that's incurred by the business. Advertising and marketing, any training courses. If you've got costs for the DBS update scheme, or is it CRB? I can't remember now. Any professional costs like that, you can actually include those. Now, how you include them and the rates you can include them. there's a few sort of anomalies. So let's go through all of those individually.
That would be great.
I'm not going to start with office and stationery because well, I'll start with stationery. Stationery is an easy one. What you've spent, you can, any stationery or anything like that, you can put that into your tax return. I had a customer, obviously, who's in a similar line of work who was producing flyers. So that's a cost you can put in. Now, if you haven't got the receipt, bank statement or something like that, or the card statement will do to work out what that cost is.
That's good to know.
Yeah, that as long as you've got proof of the actual expenditure.
Mm-hmm.
Clothing, uniforms for use at work, you can put in. Now, uniforms that are used, so general clothes that are used out of work and in work, really, I would leave those out. The reason being because you would have to apportion how long you're wearing them for personally and in work. So I would just say any uniforms you buy specifically for work, include those. Bank charges, so any bank charges you get that are linked to your business, you can put in. And like I say, self-assessment costs I talked about. Any advertising, any marketing that you do, they can go in there as well. And if obviously training course is straightforward, all of these, as long as you've got a record of what the cost is, what money you've spent, you can include those. When I say you don't need to have the receipts, what I'm going to again put a caveat on that, and that is it is better to have the receipts. If you've got the receipts, much better. You obviously you've got all the detail, but the bank statements and things like that can catch up. What you can't do is just magic figures up out of thin air and just say, oh, I think I spent £20 on that, because you've got no evidence whatsoever to say that was purchased. I'll come on to how to record them in a few minutes, but the next one is quite an interesting one, is travel. So there's a couple of different ways of accounting for travel. And the first way, if you're using public transport, then you use the actual costs. Now, a lot of the time you can get e-receipts, e-tickets. Again, those are evidence of what you've spent. So public transport is pretty much what you've spent in line with carrying out your business. So if you're getting the bus to and from or train to and from a place of work, then you can include that. Your place of work would normally be, if you've got an office, but more than likely home. So you have your home addresses where you work it out from and to. Now, your other way is if you use a car, you can claim a mileage allowance, but you need to record your mileage. If you haven't recorded your mileage, you can look back over the work you've done. So say, for instance, at the moment, I'm near Blackpool. So if I was going from, say, Blackpool to Preston, and I knew I'd done that journey five times, I could work out the mileage and calculate how many times I've done that journey, which will give me my mileage. So you can do that after the event, as long as you know the journeys you've done. But the best way to do it is keep a little book, or in your phone, just record what the mileage is each day. So that is from your home to the destination and return. You can also claim mileage. So if you're providing care for a client who you are going to take out shopping or take for a coffee, you can also include the mileage for doing that. And that is, again, that is part of carrying on your normal business. What you can't do is to claim for your own shopping. So I'll just put in that I went to Sainsbury's or Morrison's and put that in. So you can't do that. So once you've worked out how many miles you've done, and bearing in mind, again, it's only over the year that you'd need to have the total, you can then calculate how much the allowance is for the transport that you're using. So there are two different classifications. One of them is for cars and the other one is for motorbikes. Motorbikes are a flat rate of 24p per mile that you incur for business. So 24 pence on a motorbike. In a car, the first 10,000 miles are calculated, you're allowed to put in 45p a mile. And after 10,000 miles, it's 25p a mile. So basically, first 10,000, 45p a mile, after 10,000, 25, and that's in the year. So that's, if you hit 10,000, then you drop to the lower rate. Now, the other thing that I get asked a lot is, can I put in car maintenance? Can I put in for tyres? if you're using the mileage like this, which is the way I would always recommend you do it, then that figure is designed to cover the wear and tear on your car as well as fuel. Bearing in mind at the moment, I think fuel is about between 12 and 15p a mile. That's extra, that 45p covers the wear and tear on your car. So that's why that figure is calculated the way it is. And it does occasionally vary, but I don't think it's due to vary. Certainly for the next year, I'd say it would definitely be the same. So that's how you calculate your mileage. So that's for your travel, any travel expenses you've got. The other thing that people don't really know about is working from home. So if you work from home, you can claim costs for working from home. Now, people might say, well, I don't, I deliver care, I go out and do things. But if you are using your home to do your administration, you are allowed to claim a certain amount back.
Mhm.
Now, it is based on the number of hours you work per month. So if you work between 25 and 50 hours, you can claim back £10 per month. If you work between 51 to 100 hours, this is working at home, that's £18 a month, and 101 hours or more a month is £26 a month.
Mhm.
So that is for the use of your home to carry out your work. If it's below 25, there's no allowance in there at the moment. But those are the amounts you can claim. So 25 to 50 is £10 a month, 51 to 100 is 18, and 100 or more is £26 a month. Then I hope everyone's keeping up with me here.
Mhm.
Then there is also the telephone and internet. You can also charge for telephone and internet. And the calculation of this is a percentage of the use they get for business. So for instance, you've got a mobile phone, you use it half the time for business and half the time for personal, you can claim 50% of the cost for your business. Similarly, if you use it 25% of the time for business, you can claim 25% of the cost of your phone. And the same applies to the internet. It is quite a grey area because trying to work out exactly how many hours you're working from home or how many hours you're working on the internet can be a bit, again, calculate it exactly. But you can work with a kind of an approximation. But at the end of the day, if you're putting in, if you're working, say 25 hours, and then you're putting in for the higher rate of 51 hours, that's not it's not correct, and also it's not just, because at the end of the day, there's an allowance that's been put into place to make your life easier for working from home. So all those figures there, the costs are probably one of the biggest problems that people have with trying to work out what they can claim for and what they can't. The simple rule of thumb is, if you use something or if you have a service that's for your business, you can claim for it. You can put it into your costs, which ultimately the costs will reduce your profit and reduce the level that you're paying tax.
Yeah, absolutely. No, that makes complete sense. There's lots more questions that are coming in. Lots of people are asking about dates. And I think that might be down to the fact that they perhaps maybe missed the beginning, because I know that we did already talk about dates in quite a bit of detail. So I just want to remind everyone this session is being recorded, and you will get a recording of this session. So you can go back over any aspect of this that you do want to revisit. So rest assured, if you're joining late or if you did miss the section on dates earlier, then don't worry, you will be getting a recording coming to your inbox afterwards. Also, someone's asked a really good question with regards to cost, and that's with regards to about phone bills. And how do you go about including that as a cost? Because I'd imagine that's a huge cost.
So as I've just said there about the internet, the same applies to telephone. So if you've got a mobile, well, first of all, if you've got a mobile phone that is specifically for your business. When I first started out in business, I bought a second mobile phone and I used that entirely for business. The only problem was I got fed up carrying it around with me. So I ended up then using my own phone. So if you've got a phone that's dedicated for your business, you can put that through in its entirety. If you don't, you split it by how much you think you use that phone for business. Now, this is down to you to calculate how much you think. If you think you're using it 50%, of the time, then you can claim 50% of the bill. And that includes the line rental and the calls. Obviously, a lot of people now have calls included, but you can include the percentage that you use it for business, if that makes sense.
Yeah, absolutely. I think that's really helpful. Marvelous. And just in terms of, I know you did touch on this earlier, but in terms of kind of pulling all of this together, there's another question that is relevant, I think, is there any particular software? Are there any kind of tools or techniques that you use to kind of get all your numbers together?
Yeah. So first things first, I would recommend you don't need software, because software can cost. You'll be on a subscription to put it in. I personally wouldn't go as far as software. There's two methods I would use. Those that are computer savvy, just use a spreadsheet, which I'll show you in a second. The other option is pen, paper, and calculator. So you can use the good old-fashioned way. So this is just a quick example of a spreadsheet, and you'll see how simple it is. So all you're doing there, the bold figures are the calculated figures. So the sales you calculate, you can put formulas in to create the sales figure. But the sales figure there at the top, that is literally what you've taken. So you can work that out from invoices, from bills, etc. that you've for the work you've done. And then the costs, you can just split them out into the different types of costs. Now, some people say to me, oh, well, why don't I just add up all my costs together and put them in as one? Well, you can do that. That's exactly fine. But I like to say to people, why don't you get a spreadsheet, put the cost down individually for the different types of costs that you've got. And then you can actually have a look at it and see, well, what can I save next year? What do I need to not do next year, or whatever the case? You can see what you want to do with your business. So, for instance, your stationery bill might be really high. So you think to yourself, well, how can I reduce that? Or was that enough? Do I need to add something in there? So a simple spreadsheet is a very good tool. And you literally just, what I actually have a customer who once came to me with a big bundle of receipts and just said, can you sort? That's fine, I'll sort them. But then what I did, I basically said, look, let's start using a spreadsheet, and you put these figures on every month. So you keep on top of them all the time. And you say, once a month, I'm going to put all these onto a spreadsheet. They calculate up together, and then you've got your totals. So I really, really wouldn't invest in any software. Now, I am happy if you want to. I believe you've got my non-cure and care email address somewhere. Annika, I am happy if you want to ask any questions and things like that. I'd usually try and answer a question on an individual basis, but that's up to you. It might take me a couple of days to get back to you, but I can generally sort of point you in the direction when it comes to recording your sales and recording your costs and things like that. So but that's how I would do it. Just keep a basic record. I was going to do a little graphic of exactly the same thing but handwritten, but I think everybody knows it. Well, you wouldn't be able to read my handwriting, probably.
Yeah, I can totally relate to that. I've had, shall we say, feedback on the quality of my handwriting. So yeah, spreadsheets are definitely the way forward. And there's a couple of more questions here. Thank you so much, guys. The questions keep coming in, which is fantastic. So someone's asking about gift aid. Quite often when you're making a donation, and you get that question that pops up saying, are you employed? Do you pay tax? Can you tick that box?
Yes, you can. So when you do the tax return, there will be a box that you go through, which will actually specify whether you've donated any gift aid. And you just, again, keep the record of what you have, and then you can enter that into that box. Yeah,
no, absolutely. That makes sense. And also, Gemma has also flagged about PPE. I'd imagine that probably falls into a very similar bracket to uniforms.
It does, yeah, it does. Yeah. So again, if you don't need to record it, all these things, as I say, you don't need to record them separately. But yeah, PPE falls exactly in that. It's what you need to do to buy to carry out your business. So yes, you can claim that as a cost.
Great, lovely.
And that, I see there's a comment there. Yeah, protective gloves, aprons, anti-bac. Yeah, all of those things that are in line with your business. So don't stock up your house with anti-bac and put that through, but you can put through some. So yeah.
Marvelous, marvelous. Okay, superb. So I see there's a couple of people asking questions that we have already answered. So I just want to remind everyone that the session is being recorded. We will go back over these questions at the end. But Mike, if you can maybe chat to us a bit more about the whole process around getting online.
Yeah, okay. So the first thing you need to do, I know there was a couple of questions at the start about getting onto the HMRC website. So there's a couple of different steps that have to be carried out. The first one, if you've been asked to fill in a self-assessment return, you'll have already done this. And that is, you've got to register as self-employed. That's a simple task. You just pop into the Google, into a search bar, and you just literally register as self-employed. What that will do, that will give you a UTR number, which is a unique taxpayer reference number. If you basically, once you've registered, that will trigger HMRC to just those that have come late. HMRC, if you don't know what it's Her Majesty's Revenue and Customs. So that's basically the people who tax you. But yeah, if you sorry, I just lost my train slightly there. So once you've registered, that will trigger them to ask you to do a self-assessment return. So that's telling them that you are self-employed as a sole trader, which again, I'll go back to what I said at the beginning about being a sole trader. And that's when you have to do your self-assessment return. Now, that's your very first step. So once you've got your UTR number, you can then go online and you sign up for basically a government gateway. It's called government gateway account. Now, there have been some problems with this that I've encountered with some customers. You have to go through a verification process to verify your identity. Usually they'll ask you for your passport, your driving license, and questions about your credit file. So these are questions that they know about. They know the answers to. It's not it's not directly through the government. It's different organisations do it. But these are checked. The passport's checked through the passport office. Obviously, driving licence through DVLA, and then the credit reference is obviously through credit reference agencies. So you have to verify your identity. And if you can't verify your identity through those methods, they will send a code to your house or to your address that you have registered. Now, that can take a few days. So if you haven't got access, I would get onto that straight away, because it can take a few days, and the 31st of January is the deadline. Sorry, I've just noticed there's a question there about gateway reminder. I'll come to that in a second. So the reason sometimes it doesn't work, and it's been completely baffling to me, because I've had customers who have gone online, tried to put in their driving license number, and it's not accepted it. And it said, no, this isn't you, this is incorrect. And they're sitting with a driving license in front of them. So it sometimes can be a bit, I suppose the word's temperamental. And it only asks you for 2 out of 3. So it'll either ask you for driving license and passport and credit reference, or driving license and credit reference. So if it doesn't work, you just go in and try the other one first. So you know, if it doesn't accept your driving license, try your passport and your credit reference. Try the different concoctions, and if it still doesn't work, unfortunately, then it's a case of send it out by post, and it will give you that option. It will tell you to send out by post. Once you've sent it out by post, or once you've got access to your to the self-assessment side, you go online and you have to register then to say you want self-assessment, because it will give you access to different taxes and things like that. The one you need to work on is it's just self-assessment. Just select self-assessment. So it's a tick box. You click it. It gives you access to self-assessment, and then you can log into it using your government gateway ID. To get to the point where you're trying to get your ID, you can just Google, or again, search bar, log into HMRC, or you could just literally put in sort of any sign up for government gateway. All those things will get you to the correct screen. Excuse me, I'm getting tongue tied. So that will get you through to the point where you can actually start doing your self-assessment. So that's probably the key way of getting in. Now, like I say, there are problems, but there can be problems, I should say. But I have to say the help available from the HMRC is pretty good, unless you need to chat to somebody, and then you could be waiting quite a while. So you've got to just bear that in mind. But the help facilities are pretty good, so you can always sort of just click the help buttons and things like that. Now, a government gateway reminder. I am just trying to remember that one. Bear with me. I seem to remember, if you have a look, there is a tab that is forgotten your government gateway, and you can click on that. Now, sometimes, again, if they can verify who you are, they will do it there and then. And if they can't verify it, they'll have to send it out in the post. But I can't honestly remember. It's not one I get often. So I seem to remember, though, there was a tab that is, if you've forgotten your government gateway ID. I will try and find that one out, but it will be after this. So, yeah. So anyway, that'll get you in. Once you're into your self-assessment return, there's a lot of there's a lot of things in the self-assessment return which you'll look at and you'll go, that's bizarre. It's things like money from overseas investments, property, those sorts of things. All of those are pretty self-explanatory. If you've got those, like if you've got money from overseas investments, got any of the things you don't understand, the first step is click the information button next to the information icon next to the field that needs the input. Again, very, very helpful. If beyond that you don't know the figures or don't understand the figures, then that's when you need to probably just ask a question from somebody, or again, you can search for the answer online, that sort of thing. But most people don't have a lot of these things. There are also other things about your occupation. So I think one of the questions, you may have seen this yourself, Annika, that it was, are you I think there's one that's, are you a North Sea diver or something like that. There's various questions it asks you. There are reasons for it, but only complete the correct ones. But when they're in there, there's a lot of the questions that say optional. Now, my recommendation to you is, if it says optional, there's no need to fill it in.
Right.
Because you can get involved in filling in lots and lots of boxes that actually don't really matter. The reason they're optional is because you don't need to. You don't have to do that. So I would say to you, if it says optional, then you just, I would leave it blank, unless you feel particularly inclined to fill it in. But no, I really wouldn't. And then it will ask you, obviously, it will ask you for, did you make any money from self-employment, which you'd put in, costs. Do you want to enter these as individual, detailed, or single figures? So you just select that you want to enter it as a whole figure, which is the overall for the year. Because again, you don't need to put it in individually. So all of those, just answer all of those questions. And then, as far as the body of the actual tax return is concerned, that's pretty much it. You just follow the instructions. There is a section on employment. That's actually the first section you come to. And I want to talk about employment slightly, because if you can be employed and self-employed at the same time, so you can actually have a job and be self-employed. So if you are, if you do have a job, usually through your tax code or through your tax office, it will register on the self-assessment return. So it will come up and say, we have found one employment for you, or two employments, and then it will ask you to check them. Double check them, just make sure that they're correct, the address and everything else is correct. If they haven't found that, then it will ask you to enter any employment that you have had. if there's nothing there, don't think to yourself, I'm not going to put it in because that way they won't find out that I've worked for this amount and I've earned this much money. They will find you. So the answer is put your employment in. Now, to find your employment details, you would need the P60, which you get in April of the previous year. So in April 22, you'd have got one for the previous financial year. That will have all your earnings on and everything else. And if you haven't got that, the final pay slip of the year. Usually have the information and cumulative earnings and things like that. So those are the questions they will ask you. But 9 times out of 10, your employment will already be on your tax return ready filled in. But I would say to you, just check it. Make sure you check.
So is this, just to clarify, is this if you're employed as well as?
That's correct.
You're PAYE and you're doing self-employed as well?
That's correct. Yeah.
It's amazing. Yeah, that's great, because I know that we have lots of carers who juggle PAYE roles as in addition to being self-employed. So that's
it's
really
a very common thing now. Everybody needs to earn, and that people take part-time jobs as well as being self-employed. There is one other thing I'm going to in the self-assessment return. It will ask you for the name of your business. Your name of your business can be, for instance, say in my case, Michael Cares. It can be that, or it can just be your name, because you're a sole trader. And like I said before, you are your business and your business is you. It can just be your name. So if it asks you the name of your business, don't suddenly go, oh no, what am I going to call myself? You can just put your name in there.
Yeah.
So I've gone as far there as entering your your tax return details. The next step is national insurance. Now, I noticed there was national insurance. There's some questions about national insurance previously.
Yeah.
So, as self-employed, you don't get. Whereas if you're employed by an employer with PAYE, etc., you would get your national insurance taken out at source and your employer's national insurance. Obviously, when you're self-employed, you don't do that. Now, what does happen is you get options, basically. I'm just going to have a look at this. I think I've got a slide which has got some of this information on, I'm hoping. No, that's not quite it, but I'll come back to that in a second. So your national insurance is up to a certain level. It's optional whether you pay it. Now, there's class 2 and class 4 national insurance contributions. Up to £11,908 profit, you have the option of paying class 2 national insurance. It'll give you an option to tick the box. You tick the box and it will calculate that as part of your tax return. If you're over that, if you're 11,909, you will automatically have to pay class 2 and class 4 national insurance, which will be calculated onto your tax return. Now, people also say to me quite a lot, well, I don't really want to have to pay them. My advice to everybody is, if you can pay them, pay them, if you're below that threshold. If not, make steps to pay it, because this will affect your state pension and it has an implication later on. And we all know that now it's like, oh, everything's great. But in the future, when you get there, you would need to make some provision for covering these national insurance payments. So it'll also ask you, as I say, whether you want to voluntarily pay national insurance if your profit is below this level. As I say, you can choose yes or no, and it will automatically get added on. If you say no, obviously it won't get added on. But like I say, if you say yes, or if you're above that threshold, it will automatically go on and you're paying your national insurance, as it used to be called, the national insurance stamp. So that's how national insurance works. Now,
That's really helpful.
I just went there to a slide, which I'll now go back to. And I think there was a question about this earlier, is about tax itself, obviously. But what I'm going to first of all say, your tax is calculated on your, like I say, your profit. We all know that now. And you have a tax-free allowance. So your tax-free allowance is generally 12,570. So your first 12,570, you won't get taxed on. There is £1,000 of profit which is disregarded, and that's your trading allowance. So that's the first £1,000 you make, you won't get taxed on at all. After that, 12,570 is the next threshold. Now, different people have different thresholds. It all depends on what other work they've got. For instance, if you've got higher earnings from some other source, that can vary. But that is generally the rule of thumb. And then after that, you will be taxed at 20% of your earnings over the 12,570. Okay, so that's when you start paying tax. If you're employed and self-employed, then you've got to remember that your employment, if it's over the 12,570 earnings, will use up your allowance. So if you earn over 12,570, you will be taxed on all of your self-employed earnings if you are working and you've earned that much. So that can make people, and that can give people a bit of a surprise, because they say, oh, I've already paid this tax. Yes, you have paid that tax, but that's used up your tax-free allowance, and then you will be taxed on everything you earn self-employed.
How interesting.
So then what happens is you'll get told how much you're going to pay. And this is where I come to this slide. So this is when it will tell you exactly what tax you need to pay for the year. They expect you to pay the tax by the end of the month, by the 31st of the 1st, 23. So they will expect you to pay, I've given you an example here, that a tax bill of £4,500, say, you would have to pay by the 31st of the 1st, 23. But then what they do after your first year's trading, they will add on the same amount again to be paid on account for the following year. Now, what that means is next year, that will be taken off what you've got to pay next year. But this is something, again, to bear in mind, because what you could end up with is by the end of January, as you can see there, a bill for 6,750, which is 4,500 for the previous year, plus half of that to 4,500. They would then expect the next half in July. So you've got to bear in mind, and you've got to plan for that. There are time to pay arrangements that you can get. These were brought in. These were brought in since COVID. Or during COVID, I should say. They were reinforced during COVID. You can apply for a time to pay, but it's not necessarily given. You have to give your reasons why you need time to pay. And usually they would spread it over a maximum of 18 months, because what they're worried about is the following tax return. The following tax return is, you're going to have to pay that as well, if you see what I mean. So you've paid some on account, but if it's too high, they don't want to put people into distress. So you can get time to pay, but do not rely on it. It's not automatically given. So that's the key with that. And then in terms of how to pay it, they give you an option of how to pay. Usually it's by bank transfer. You can do a direct debit, or you can pay by credit or debit card, but not a business card. It's only a personal card. But you can do all that online. Once you finish doing the self-assessment return and you submit it, then you get a link to basically work out, to basically pay the actual account. The other thing I'm just going to mention, there is also, if you do get charged for the following year, so if you have hit a threshold that you have to pay the tax for the following year, and I think the limit is, it's if you make above, if your tax bill is over £2,000, I think, you have to then add the following years on. You can, if you think your business is going to drop off that year, you can claim to have that deferred. So you can claim to have that deferred a bit of time, so that you don't get charged that amount on account. But again, it's not automatically given, so you can do that. But if you need help paying and things like that, then the answer is look for the links, and it will take you there.
Yeah,
does that make sense?
That makes complete sense. And I have been, having submitted tax returns in the past, I have been completely caught out by the whole payment on account thing. and just it honestly, it took me a few tax returns to get my head around just the whole notion of how that will work.
Yeah,
so that's really, really helpful.
it's just a thing that prepare for. I would prepare for a double tax bill. Basically, is what it's telling you to do, which is a bit difficult when you're in January and you haven't saved that money.
No, absolutely.
So it can be difficult. Yeah.
Fab. That has been really, really helpful. Mike, would it be okay if we started just going back through the questions, unless there was anything else you wanted to cover first?
No, I think what I'll do, if we go through the questions, and then what I'll do is at the end, I'll just give you some of my, probably go over a couple of other bits, the same bits, but just quickly go over sort of just some cautionary tales and some little bits of just the helpful hint. Yeah, but no, let's go back. Yeah, honestly, let's go for the questions now. Yeah. And I hope I can answer them all, because I've looked at a couple of them and I'm thinking, oh, excuse the pun. I've looked at them and thought this could be taxing.
Yeah. Oh, yes, absolutely. We had to get that line in somewhere. So look, what I'll do, I will read them out. I'm sure some of them might be very, very specific to certain individuals' current situations. So I'm sure we can always work out another way to get answers to people if required. But the first one that I have, I've got Jess, who has been really helpful with just collating the questions that we haven't specifically touched on. So the first one is, I've been paying Nino, I think that's national insurance.
Yeah.
Yeah, I'm not sure what the rest of that stands for. And tax in my savings on self-assessment account to budget for my tax and Nino. Will I be able to pay directly from my budget?
I'd like to say the answer. That one I might defer on slightly. It's a good one to start on. Hi, Jess, by the way. Yeah, I think that one I might defer on, and I'd probably need to touch more detail on that, probably.
Okay, no problem. Okay, so moving on to the next one. If you use traditional accounting and buy a vehicle for your business, you can claim this as a capital allowance. If I use cash basis accounting and I bought my car and mobile phone for my care business, can I claim these, as in the car and the phone, as a capital allowance? There's a few follow-on questions, so I don't know if you just want to answer that one first.
No, go for the follow-ons just in case.
So the follow-ons from that are, what if I want to use simplified expenses, or should I have it as allowable expenses?
Okay. Right, first question. The car. So if you buy a car through your business, you can put the car through as capital allowance. So you can put that through. Your mileage claim changes then. So if the car is fully owned by the business, you can't put through the mileage calculation we did earlier. You would have to work on basically you would have to work on the fuel and the wear and tear. You could claim your maintenance back on that. So you can do that. If your car is not bought through the business and not owned by the business, then you can't. You can also, though, there is a section on self-assessment return which talks about plant, machinery and assets, basically. So you can then depreciate the car through your self-assessment. So there is a scope to do that. So you can do that. But like I say, that's if the car is bought by the business. But theoretically, if your car is bought by the business, it should only be used by the business. And in terms of fuel, you could only claim the fuel that is used for your business. So yes, you could buy it through the business. Your fuel would have to be apportioned out for personal use and business use if you're using your car for personal use. And the wear and tear, then you'd have to apportion based on a percentage of time that you use the car for personal and business. What was the second part again? Sorry, yes.
So the second part was, what if I wanted to use simplified expenses, or should I have it as allowable expenses?
You can use, again, simplified expenses is for like I mentioned there about you working from home. So those are simplified expenses that they've put in place for certain things. So there's working from home, there's travel, and there's one other, I can't remember what the other one is. So Travel, I think I've answered that. If you own the car for the business, you can't use simplified, but you can for the home, and that covers your use of your home plus the utilities at home. So yes, you can use that for home, but for the car, no. If you've bought the car for the business, you can't.
Marvellous. That's really helpful. I hope that has answered your question. If not, do chime in. I'm going to move on to the next question. So if I have a limited company, can I do the tax return myself? And then also it says here, I'm not entirely clear about this, but it says, and I saw rent there. If I work from home, can I put the rent as a cost? Oh no, that does make sense. I'm just being slow.
Yeah.
So just to recap, if they have a limited company, can they do the tax return themselves, and can they put rent as a cost for working from home?
If you've got a limited company, the rule of thumb generally is you would generally need to get the accounts audited. However, as a micro business, you can submit your own corporation tax returns, and you can do those yourself, but there are certain criteria and certain rules around that. So if that's one that I could pick up afterwards in some way, because it's not the same when it comes to limited companies. There are certain rules. You used to have to get them audited by accounts, but by an accountant. But now there is a way of submitting your tax, basically your returns, your annual returns, as they're called for limited companies, as a micro business. So again, it would depend on the criteria. So that's something, if we can pick that up afterwards, that'd be great, because it is literally it's not something that will affect everybody. That's just going to affect anybody who's got a limited company.
That's really, really helpful. Marvellous. Okay, so moving on to the next one. Oh, this is a great one. Can you claim for childcare costs?
Childcare costs, that is a good question. I've never come across that one, actually. So if you bear with me 1 second, there will be a way, so just bear with me a sec. I don't want to take up too much time while I'm looking for this, but where am I? Tax return. I'd like to, it's going to take me a little bit of reading up on that one. As I say, I've never come across that one, strangely, because you would think I would come up with that quite regularly, but I've never come up to how that affects your tax return, because I know you can get childcare costs back. So again, I'm making a note of that one.
Okay, great.
I'll come back to that if I can.
I mean, what I'm actually going to do, Mike, after this webinar is maybe tap you up to perhaps we can work together on putting together a blog which includes all these great questions.
Yeah, perfect. No problem at all.
Because I think that would be a really great way to answer them. Let me just give you a couple more. So, can you give any pointers in terms of if you're having to claim any time off sick?
Yeah. Unfortunately, time off sick, because you're self-employed, your time is your time. So if you are off sick, you are not going to be able to get reimbursed for any time you're off sick. There was a situation during COVID where you could, with COVID, if you had COVID, you would get a certain amount back. But as far as I know now, there is no provision for you to get any sort of sickness or anything else like that. I do believe as a small business you can get insurance against that, but usually that's cost prohibitive. Right.
Yeah. No, that makes sense. Okay, and then we have a very unique question here from someone who is not only just a carer, I shouldn't say just a carer, but who's also an author. These are two separate self-employed businesses. They would like to know if they should add all their costs and income together for their tax return.
Yeah, so if they are sole trader businesses, then, like I said before, you as a sole trader, you are the business and the business is you. So any business that as a sole trader you operate with, you include all those figures together. Now, again, in the self-assessment, it will say then how many businesses have you got? You specify, and then it will ask you to name all the businesses. So yeah, you put those figures in together. So you are the person. If you run a business as a sole trader and you run business as a limited company, then you would be doing your tax return as a sole trader because the limited company is a separate entity. If you run a sole trader business and a partnership, then again, it would entail basically the partnership tax return and then an individual tax return. So without knowing any more detail, the basic principle is if you are a sole trader as an author and a carer, then you put those figures together.
Yeah, that makes sense.
Because you are the entity, so you are the business.
Brilliant. And then there's a question here that Jess did flag to me earlier, and Jess has kindly copied and pasted it again. So if you go over your personal tax allowance with employed work, do you still have the £1,000 trading allowance,
Yes.
which you mentioned is not taxable for self-employment?
Yeah,
do?
that's correct. Yeah, that's correct.
Marvellous. Marvellous. And then a couple of more questions. Some of them are incredibly specific. So this one here from Savani, I tried to open an account, but I couldn't open it because of either the national insurance number. I have my national insurance number with my old name before marriage, and after marriage, my name changed, so it's not accepting my details. It shows that invalid details. What do I need to do? Do I have to apply for a new national insurance number? I don't think that's impacted by your name changing.
No, I think on the when you go into the detail of it, it asks you if you have changed your name, and it should pick up one or the other name. I've had a similar problem to this, and it was actually in the end I thought it was going to be taxi, and it was quite an easy workaround because it did ask for the married or maiden name. So again, what I'd probably, if there is a way of getting a screenshot of what it's saying, I can maybe point in the right direction. But yeah, it does. Generally speaking, it does pick it up the married name and the maiden name, unless there's something else that's stopping it doing that for some reason. But yeah, it does account for that. It does tend to work. Like I say though, the system can be a little bit temperamental, I think is the best word to use.
Very diplomatic.
Yeah, it can break at times. So yeah.
Yeah, sure. But Savani, I hope that's helpful. It sounds like maybe it might be worth you trying to give it another go and take a note of Mike's email address, and then if you do get stuck with it again, sending over a screenshot. And then we've got another question from Susan. How do I find out how much I have earned PAYE as I work through the current year?
If you've got payslip, it will be on there. So there is the YTD earnings is the year-to-date earnings. If it's the current year you're talking about, it won't matter for the tax return.
Right, yeah.
So if it's since 5th of April 2022, you don't need to worry about it. But if you worked part the way through the year, then your final payslip or your P60 will have your year-to-date earnings. If you can't get hold of those, contact your old employer and ask them for the payslip, and they should give it you. And a lot of them these days use portals that you can go on and actually download them. But if it's earnings this year, you forget about that until next year.
Yeah, sounds good. Okay, and then next question is, so this is from someone who has a limited company. They haven't been able to work since July due to being pregnant. They don't have any money to pay tax yet until they have the baby next month, and then will obviously be on mat leave. What do they do?
Right. Well, as a limited company, again, the rules are slightly different. So you don't need to complete a tax return, self-assessment return. So this is where you come into actually having your annual return that you put in. The simple answer is when it comes to payment is to try and take advantage of the time to pay arrangements. and they will look at every case individually. But again, just bear in mind, because it's a limited company, it has a different set of rules. So it's a bit more of a difficult one. Just to put you clarify where we are, in terms of, I've talked a lot about sole traders being the company, and the company is the sole trader. When you're in a limited company, in effect, so instead of you being the, shall we say, the entity, the business is the entity, and you are just working for the business. Now, I often say to people, it's like you're an employee of the business, which, yeah, that's true. But you don't have, because your business is your business, you don't necessarily have the same infrastructure. So you may be working for the entity, but you might not, if you haven't got sort of your maternity situation, your maternity things in place. It's yeah, limited company, as I say, it is just different because the entity is the business as opposed to you as an individual. It might be worth looking to see if you can, I don't know if you've looked into this, but it might be worth looking and see if you can get any kind of statutory maternity pay and things like that. But in terms of actually paying your tax bill, it would be a case of going through the time to pay arrangements, which once you've logged on to your account, you'll be able to go into time to pay, you'll search time to pay, and it will give you some direction. Again, if you want, because I don't know the specifics, you can drop me an email and I'll do my best to answer you and to look into it. But in essence, the time to pay route is the way to go.
Marvellous. That's so helpful. Thank you. And then I've got a couple more questions just with regards to brackets and tax bands. Grace would like to know, is it 40 or 50,000 when the higher tax band is triggered?
50,271.
Amazing. Well, there you go.
And that's up to 150,000. So
Right.
yeah, and then it triggers again. So but yeah, so it's 50,271. But again, just bear in mind that is profit.
Yeah, of course. Yeah, that's all important, profit. And then someone is also asking about tax percentages. Does HMRC give you a range bracket?
Yeah, so the tax rate, basically the percentage tax rate, is anything up to 12,570, as I said, is 0%, so that's your tax-free amount. Your next rate, your basic rate, is 12,571. Again, we're talking profit here, so we're talking earnings to you. So 12,571 to 50,270. That's a tax rate of 20% on that bracket of the 12,571 to the 5270. And then the 5271 that we just talked about to 150,000 is 40%. And then if you do earn above 150,000, you're looking at 45%.
Amazing. Great. And we also have I think this might be our last question from Andrea, who'd like to know if the financial year is the same for people with limited companies as it is for sole traders. Do they put their tax return in at the same time?
No. So as a limited company, when you set the company up, I think it gives you 18 months, but it is from the date of registration of the company.
So let me just tell you, Mike, sorry, I don't mean to talk over you, but Andrea has also said that she set her company up in June last year. So what's the date for her?
So the date should be June. It should be the first annual return is due in February 2024. But the easiest way to do that is to type your company name, your limited company name, into a search engine, and just type your company name and then company information, and it will take you to a link to Companies House website. If you click on Companies House website, it will tell you when you're due, when your returns are due. But also you've got to bear in mind there is a thing called a confirmation statement that's due as well, and they are due at different times. Confirmation statement is just confirming the status of the company in terms of who the directors are, if it's still the same. So it's just every year you have to do that. But the annual return, it will tell you when your accounts are due by. So you just type in your company name and then company information.
Marvellous. Andrew's response to that is, wow, great news. That's amazing. Glad we could be of assistance, Andrea. Harjinder's asking what they can claim for as a carer. Harjinder, this session, we talked about that in quite a lot of detail at the beginning of the session, and this session is being recorded. So we'll send you a recording of this. So if you just watch it back from the beginning, then we go over that, and Mike even shares an example spreadsheet with a list of all the various costs and things that you can claim for. So if you just give it a re-watch, that should answer your question.
I mean, I am, like I said, I am happy if you want to drop me an email if you've got any questions. I'll do my best to come back. Similarly, you know, I don't push myself out there or anything like that. But if you do want to, if you're struggling and you want a tax return done, I can do them. And as I say, I've got a special rate for cure and care. But just bear in mind, time is of the essence now. Whichever way you do it, there's now 20 days left to complete your tax return. If you don't complete it by the 31st of January, unless the government do extend it, which they sometimes do, but they only extend it usually in the last week, there is a fine, and it's an automatic fine. And if you don't pay it, it goes up and up and up and up. So just bear in mind, it is very, 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 very important to do that.
No,
to get your tax return in on time. I just want to, I saw there's another question there. Can you assist with community interest companies? That they are governed slightly differently. So I would say probably need an accountant to do that. Just saw that one there. Just want to quickly give you, are there any more questions there?
Yeah, one more question here from Maria. Who'd like to know how much the fine is.
The fine, I think it starts at 100.
Yeah, not good.
Yeah, it's not good. And then it does rise quite quickly. But you've also got to bear in mind that fine is if you don't submit your return on time, or I should say, if you don't pay on time. So again, if you can't pay by the 31st, you need to push those time to pay arrangements, because and basically find a way that they can give you a time to pay. Because if you don't organize that, literally as soon as it goes to the 1st of February, the letters will start coming out. You've got to bear in mind the government are trying to recoup as much money as they can at the moment, and they're very hot on claiming back as much money as they can in fines. So it's very important that you either pay or you make arrangements to pay.
Yeah, no, absolutely. That is very sage advice. We've still got some more questions coming in, just all about when to submit the tax return. So just to remind people, this session, it has been recorded. It is being recorded. We did lots of chat all around deadlines and dates at the beginning of the session. So if you just rewatch, and we'll get that recording out to you tomorrow. I don't think there are any more questions. So Mike, I'd just like to take this moment to say thank you so much for taking the time to join us this evening. And also thank you to everyone who tuned in and shared all their questions. I really hope that everyone has found this useful, informative, interesting. I know, Mike, you were saying that tax is not that interesting. I disagree. I think the session's been incredibly interesting. I know that I've certainly learned a lot. And as someone that falls into the bracket of PAYE and self-employed, this has been incredibly useful. And I'm now going to actually go off and talk to my other half about my tax return, but that's a separate issue.
just remember, numbers don't talk back.
Yes, probably for the best. Marvellous. Thanks again so much. And for everyone who's tuned in, you can probably see I have pinned Mike's email address to the top of the chat. So if you are still stuck for any queries or questions, do copy and paste it and get in touch with Mike. But thanks again. As I said, I will be pinging a recording round to everyone. It'll probably be in the latter stages of tomorrow. And Mike, thank you so much. I will be following up with you to see if we can potentially put something together on the blog as well, just to collate all of these answers as well, because I think that would also be really helpful.
No problem at all. Glad to do it.
Marvellous. Amazing. Well, in that case, thanks again, everyone. I wish you all a lovely Wednesday evening. Thanks so much for tuning in, and we'll be following up with the recording. Thank you so much. Take care. Bye.